Hi, welcome back. It's the weekend. Let's do a quick recap of what happened in the market this week. Let's start out with the dashboard. So, as far as the market score goes, um, we're still bullish. The entire week we've been bullish. Trend has been strong. Sector health, sector breadth is healthy. However, we did decline 9 points on the market score. We were extremely bullish. We did pull back yesterday, which we'll see in the chart. So that's why we weakened just a bit. However, the market is still strong. Risk pretty moderate. Volatility has been calm. Market breadth. Let's take a look at the market breadth. Okay, so from the 122 stocks that I track, 48 were advancing yesterday. 50% were declining. Okay, as far as the SPY versus the equally weighted S&P ETF, that was pretty much up, which is good. The SPY was down, so that means that the stocks with the heavier that are heavier weighted in the S&P were majority bearish. Okay, the rest of the stocks are basically flat on the day. Let's jump into the chart to see what's going on. Okay, so let's start out with the Qs, and you'll see this from the this is what I was talking about in the market score. So market score weakened because the indexes were pretty much down yesterday. I mean, not extremely down, but we were trading lower yesterday from where we were the previous day. And you can see that from the candle here yesterday. However, the market it is still in an uptrend. We are still in the uptrend, right? We're still holding this level right here. And for the Qs, that's extremely important because this is the area that I was talking about last week, right? And even the week before, being that level. So once we can hold above that level, next week I'm looking for the continuation back up into the highs, like what happened with the S&P, because the S&P already pushed up to the all-time highs. S&P already broke out. So what's lagging is tech, and the Qs are telling you just that. We haven't broken the highs yet. 20 moving average is still curling. MACD is back into positive territory, and we're above majority of the trouble area that we had for the past few weeks, even going in back into last month. Okay, if you go down into the 4 hour, you're gonna see that ever since we hit this resistance level, which is an important level, we've been trading flat. We did took out that level, and then we're consolidating, which is extremely good. That is good for the market going into next week, unless we get some crazy news during this weekend and then we get some kind of sell off. But if we don't and we continue the trend that we've been trending in since last week, I expect the chart to take out these highs of 734 and head higher back up into the all-time highs, back up into these areas. So that's what you need to watch going into next week. You do need to watch this level as always. If we break down below here, then I'm not gonna say we're gonna trade all the way back down into these lows down here. No, I'm not saying that. What I'm saying is that is a possibility that we trade back down into the 160. All right, and then at that point you want to look for a bounce. But if that doesn't happen and the trend continues, then you're going to look for the move from here going into next week because the market is still strong. I mean, everything has been indicating that the market is just going to trade higher. CPI, PPI, jobs data, everything is looking pretty decent right now. So I don't see anything stopping this from moving higher except for maybe the Middle East and that drama that's going on. Okay, let's take a look at, let's move back out into the daily and take a look at the SPY. All right, so the SPY, like I said, has already broken out. We did break out. We did have some kind of pullback last week, but then we just found support and we continued to just grind higher. Even made an all-time high on Thursday, which is crazy because look at this move right here. Broke all-time highs. I thought personally that we were going to trade back down into these levels, get some kind of retest and then a move higher, but we didn't get the complete retest. We just got a miniature pullback and then just to grind higher. We still could get the pullback. I'm not saying that we couldn't. The same thing with the Qs. If we get some kind of pullback down here, I'm not watching like I am watching with the Qs to come all the way back down to the 160. The level to watch if you break down would be the 20 moving average. And also that would kind of coincide with this level right here, which was former resistance and now it's going to turn into support if we pull back down here. Okay, if not, I just, I mean, look at these moves right here, right? Look at these moves. So I expect the same thing here if we continue to trend higher. Just kind of just trade higher, trend higher, eventually come back down, test the 20, and then continue higher. I mean, it's a SPY. That's what it does all the time, right? Once we're trading higher, there is no extreme pullback. We just get these pretty much just grind higher every day, get us every now and then a pullback to the moving average, back to the moving average, back to the moving average, trade higher. I mean, so just watch out for that. Um, not a lot of risk in the market. Well, I'm not gonna say that's not a lot of risk. There's always risk, but the risk is pretty moderate right now, okay? And if we are gonna trade higher, then I mean, I don't have a target to the upside for the SPY. We're at all-time highs, so I really don't have a target. Okay, let's get into first stock I want to get into is let me get into SNDK because I did call this out on Friday. Well, I called this out on Thursday, before the open. Okay, I call this out because, and actually I've been talking about this for the whole week. The break over the 1445, 1450 area it was a very important level. Okay, and I saw that once we hit the 20 moving average and we move back down here, I realized that we've been putting in higher lows this whole time. Even though the daily looks a little bit weird and choppy, we have been putting in higher lows because the lows, once we tested this, is look at this right here. We had this sell off right down into the 160 moving average. That area was a strong support area because why? This is the area that we broke out of in April or mid-April, right? Broke out, even came back down and retested before moving back higher. And this is the same area right here that we pushed off of. Yeah, we had some kind of bouncing around in this area, but that's because we had another set of resistance up here, right? And we also had the 20 moving average curling, well, not curling, but like trending lower. My idea was once we hold this and we start pushing higher, anything above 1440, 1445 is a buy. And the target should be anywhere over these highs right here. If you're going to swing this, those are the potential target because we could head back to all-time highs and we could be testing 2354 again sometime mid, well, by the end of the month, maybe mid next month. Okay. It's not impossible. And plus, the news around SNDK has been super bullish. So I expect this to continue to run for the next few days going into next month. And even if we do get some kind of pullback, I don't expect like a crazy pullback down back into the 160. If we are going to pull back, I think it's going to be something like we're going to get the 20, maybe some kind of pullback down here, find support, and then push back higher over that level. Okay. However, I mean, to be completely honest with you, my style of trading is the break and the retest. But for the past couple of months now, we haven't been getting the retest. What we've been getting is just this breakout and just like this crazy higher move up, and then you get some kind of like sideways moving chart and then the move back up. We're not getting the pullback to the previous level. We're not getting that. And I've noticed that over the past couple of months. So even though I am waiting for the pullback, I am already in this. But if I was to wait for the pullback, because I bought the break, because I've noticed that the the charts have been breaking out and moving higher. But I am saying for a better entry, the idea would be, yikes, what's going on here? The idea would be the pullback down here, right? That would be the pullback, the move higher, and you could possibly get the entry would be down here. Just to be honest, if you pull back down here, I don't see any reason for you to wait. Once you get a daily close green, I think the entry should be closer to this area because we know once it break below here, there's a possibility that what is going on with my mouse? So the entry should be somewhere down here, right? If you're gonna swing it and you want like a low risk entry, because once you get the green close on the candle, looking for entry because that will be the safest way to get in because we know once it break back down here, there's a possibility that we're heading back down here to the 160, right? So you want to wait for the move back here. However, we might not get it, and we might just get the another day where we just rocket ship higher, and you get something like I've been telling you, where we just trade sideways and then a move higher. Okay. But realistically, you want to wait for the break and the retest. With that being said, let's move on. Tesla. Um, Tesla's been an interesting chart for the past couple of weeks now. Because even after the sell-off, we did bounce right here. We pushed higher. MACD is trending higher. It hasn't quite gone back up into the positive territory yet, but we did break over this previous resistance level. But this is what I want you to pay attention to. And I've talked about this in the past. Whenever you have the 20 moving average this much decline, any move higher above that 20 moving average, you should be waiting. You shouldn't be entering in any of those moves, because what's going to happen is we are going to get the pullback into that 20 moving average. Once the 20 moving average starts to curl, whatever movement you get up, you're going to get some kind of movement down back into the 20. And while we might not completely pull back into the 20, we are going to get some kind of pullback. All right, we are going to get some kind of pullback. And maybe we don't pull back into it, but eventually we're going to test it. We are going to test that 20 moving average. So it's going to take some time to flatten out. And this is what I was saying right here. Look, once you break the 20, if the 20 is not already trending higher, once you get this move higher, you do get this pullback into the 20. It happens all the time. I mean, I don't need to go over 20 charts and show it to you. You can just go back and look at it. The 20 simple moving average. If it's in deep decline and you get like a really nice move, really solid move over that 20 moving average, look for the move back into it. And you're going to see it over and over and over again. It just happens all the time. Okay. All right. Let's continue. Let's move on. Let's see what oil is doing. So oil, after June, I guess was June, right? After beginning of July, just continue rocket. We just rocket ship higher, mainly because of the Middle East and the issues down there. But we sold off since, and you need to pay attention to this because we did find some support down here at 74. We're trending higher. We did break above the 160 moving average, and we're holding that level. So the next thing that you want to pay attention to moving next week is, I'm not saying it's bullish or it's bearish right now. I'm saying you need to wait because we did put in, these are lower highs right here, lower lows, right? This could just be a lower high for another leg down. Or this could be the changing of the trend, and this pullback right here could be the of the first of the trend, right? This is the first high. We could be putting in a lower, well, a higher low. And then if we get some kind of move up, breaking this high, then the trend is essentially changed because now we're putting in higher highs and higher lows. Okay. So you need to pay attention to that with oil. And if oil starts moving higher, you know that's not good for the market and inflation. So that's something worth paying attention to. Okay. Let's move over to, what do we want to look at? Oh, let's take a look at SpaceX. SpaceX, I think I missed this one on the just a 2-day swing trade on the 4 hour. And it's because I was not gonna lie, I was scared. Because I did see this movement right here. I did see the flattening out. I did see that we bounced here twice, putting in this double bottom. We pushed above the 20 moving average. And I should have known that once we bounce off of this area, we are going to test we weren't putting in lower lows. That was a clear double bottom right here. And I should have known that we're going to test the 160 moving average. However, I mean, it's not too late. Judging by the 4 hour, there is another entry to be had. I would just wait for the, oh, yikes, what is that? I would just wait for the 160 to start curling, and maybe we get some kind of trade like this. All right. And then I'll watch for the push off of the 160 or even if we get the 20 start curling, something like that. I mean, won't probably be exactly like that, but something like that. And if you have the 160 start curling also, any bounce into these, any of these two, that one or that one, I would look to take some kind of swing trade going, maybe up back up into this area, which would be 175. Not looking for $200 trade yet, but that would be a decent trade. Let's take a look at NVIDIA. Because NVIDIA, and this is what I was saying again, we get these breakouts and you don't get the full pullback into the 20 or even into this previous resistance level. You get this sideways trading. And I'm telling you, man, you see this over and over, and it's just so annoying. Sideways trading, and then you get the move higher. And even here, where you think, all right, cool, this is maybe the time where we might start selling off back into the 20 and into back into the resistance level. Well, previous resistance, now support. It could just do something like this next week and take off to the upside, and it's very frustrating. Look at it. We see it right here. It's the same thing. However, this one did pull back, right? This one did pull back. So, I mean, I'm not going to talk too much shit. We did pull back there, okay? But it's been happening over and over and over again. And it's just frustrating when you're waiting for the setups. And sometimes you even rush in right here because you're like, okay, I've been seeing this moving sideways before the push higher. And then it turns around. And then other times you're waiting like, okay, maybe I should just wait for the pullback, and it does never pull back, right? You saw this with Apple. I mean, this was the break of the channel, and you would think, okay, we broke out of the channel, we pull back to 20, and then a move higher. And no, it just broke out, moved sideways, up right at the resistance level, and then took off again. We did get a pullback, but then the second leg higher was basically just ran out of gas because we were just that far extended, and then we're now pulling back, right? And Apple is back into this level where initially I thought this is where we were going to pull back into during this breakout, but now we're back into this level, and now I have to watch this again because the idea with this is now we're going to trade sideways and then probably get some kind of move higher, wait for the 20, so on and so forth, for another move higher, probably break out of these highs again, right? I'm not paying too much attention to Apple because I'm not trading Apple right now. I'm focused on other charts that might be better opportunities. Okay, let's look at one more, and that's going to be the IWM, the Russell 2000 ETF. This one has been a little bit more stable for the past. So the small caps have been pretty much stable for the past. Right now, battery. Small caps have been stable for the past couple of months now. Even with this pullback, we didn't pull back all the way back down into the 160 or even back down into these levels. We just, I mean, we broke below the 20 moving average and we trended higher, and now we're just continuing to trend higher. And I mean, personally, to me, that's a good sign in the market because once you have these small cap stocks that are trading higher, it's good for the market. MACD is trending higher, so I expect the Russell to continue to trade higher unless we get some kind of bad news coming out of the Middle East again or some interest rate issues next week. CPI may be bad, but other than that, the market is going to continue to be bullish unless something happens. Even if we do get some kind of pullback, I do think that kind of pullback is going to be an opportunity for a buy. All right. So, I mean, that's my breakdown for today and this week. I'll catch y'all next week. Maybe I'll do a video Monday, let y'all know what I think after pre-market. Well, after take a look at pre-market and after the weekend has passed, and we know if there's any bad news or anything coming out of the Middle East or there's any developments. Okay, we'll see how the market opens on Monday, and I'll give you guys another recap. All right, that's it for today. Peace.